At one point last night, two Italian parliamentarians grabbed each other's throats as the debate over reforms boiled over. Joining us to discuss the latest developments in the Eurozone is Alex Dershevsky, founder and managing partner at Recovery Partners. Good to have you back with us, Alex.
Thank you, Howard. Thank you.
It's getting physical over there.
No, I'm not going to grab you, Howard. Don't worry about that.
So, where are we? We got a vote approved in Germany for leveraging the bailout fund?
Yes, but not allowing the ECB to fund the bailout fund. And the other price Merkel extracted from the Bundestag is that she's got approval to go ahead, but on the basis that the ECB no longer engage in secondary bond market purchases. As you know, the ECB so far has bought about 169, 170 billion of Italian, Spanish debt, Portuguese debt, Greek debt. That's all over now. If the refunding, the releveraging of the fund is going to go ahead with the German agreement. You know, the Germans can only negotiate now within those parameters with the rest of the EU.
So, what are you hearing about the negotiations? Are you hearing anything about the negotiations? Are they negotiating one bond after another on haircuts?
No, this is all extremely attenuated. You know, we've been talking about this for over a year now, Howard. And as I mentioned in the summer, this is sort of we're in Act 2 of a 4-act kabuki play. I mean, how it's going to end up is still very much up in the air. It's an extremely complicated process. I'll tell you one thing, though. There was excessive exuberance earlier in the month. I was in Washington, and everybody I spoke to down in Washington within the perimeter was saying, well, just wait till October 23rd. We're going to have a plan to refloat Greece. We're going to have a plan to, leverage up the EFSF. We're going to recapitalize all Europe's banks, and, we'll stamp out the contagion on that day. And I kind of went away from, a series of meetings where this was told to me, actually quite incredulous that people could believe this.
And these were what kinds of people?
Well, these were people within the perimeter. These were officials of various sorts, people in the know. And the
big international...
Yeah, well, the way these IFI meetings take place, the G20 meetings and the European ECOFIN meetings, which were all ahead of my meetings in Washington, typically the communique, all the letters that are sent out to the markets and the press releases are agreed weeks in advance. So everybody that I was talking to had already seen that material, and that was in the material, and there was an effort made to smooth market expectations about what was upcoming in an effort to stamp out any fears that the agreement might not be reached. But now we've passed that date, that was this past Sunday, without an agreement. We now find out this week that it's going to take, another series of meetings before they find out how big the ESF even has to get. And we also find out that the head of the ESFF, Klaus Regel, is going to China and to the BRIC countries this week to solicit their support for the refunding.
How much do they need from emerging markets?
Well, we don't know how much is going to come is coming forth. How much is coming forth? I mean, by my accounting, in looking at the ESFF structure, you've got between the basket case countries about 50 billion of guarantees that are probably worthless within the structure itself now. So the ESFF, as far as I'm concerned, is currently undercapitalized under the existing rules.
So we are expecting, I believe, at 1:15 Eastern Time, some sort of comment from Brussels. The meetings are ongoing there today. We'll see if we get those at 1:15 Eastern. They may be late, as they sometimes are, but a major investor that I was emailing back and forth with in Europe today was saying that he hears something new every 2 minutes.
Yes.
He just doesn't know what to believe.
Yeah, absolutely. And it, like I say, this is a long process, extremely complicated. It's going to drag out, and there are no simple solutions here. The biggest sticking point is not so much the size of the ESFF. That's a hugely important question. But the biggest sticking point are the bank haircuts. Germans are now saying, Merkel is now saying 60%. You recall that I told you guys it's got to be 60, 70% now. Well, the Germans are at that point. The banks now are at 40%. So there does seem to be movement on these issues. If you recall,
they saw it off at 50?
Yeah. Well, I don't think they need. If they saw it off at 50, it's not enough. It's not going to be a viable restructuring. It's got to be 60 or above. The banks are now at 40. You recall, in July, everything was predicated on a 21% haircut.
But look, maybe this is a stupid question. You tell me if it is. But are these real haircuts if they're going to recapitalize the banks? And they're going to pour more money in. So who's really taking a haircut?
Well, exactly. I mean, and where's the bank recapitalization funding coming from? All of these are questions that need to be answered. And right now we don't have answers for any of these questions.
So what about Italy? You know, there's a possibility that government could fall while all of this is going on.
If the government falls, that would spell, it would be quite serious for this whole process, because then you'd have a hiatus before Italy's actually able to come back to the negotiating table, and they're very important to the process. You know, they've got 2.4 trillion of debt. Debt to GDP there is 120%. It looks like the reason it's going to fall is because the consensus around the austerity measures is crumbling, and Berlusconi is losing support of his coalition partners. That's very serious. If they move away from the austerity package, and there's a political reaction against that that's reflected in a new vote, that would be very, very serious in terms of, you know, the probability of success of coming out of this negotiating process with a positive outcome.
Martin Wolf, writing in the Financial Times today, did a little bit of math, and he said that Italy needs to raise a fifth of its GDP each year in bond sales.
That's right. I think I quoted that stat earlier this year. I mean, over the next 12 months, they got to do about 400 billion euro funding. They got to refinance 400 billion euro funding. You mentioned the 6% bond level in the 10 years for Italy, and that being unsustainable. Well, before unification, before monetary union, Italy was paying 12% on its 10-year bonds, and that was sustainable at a much lower debt level.
They were paying an emerging market rate rather than a developed market rate.
Yeah, and then after euro convergence, then they were able to pay at the lower euro rate, piggybacking off of the greater creditworthiness of Germany and France.
So they were getting cheap money, and they were still a developing country.
Then they went on an orgy of borrowing, and now they've got a debt level that's unsustainable at 6%. That's scary.
What is sustainable? What is a sustainable 10-year rate for them?
Well, at 120% debt to GDP, you want to keep your interest payments envelope at a reasonable percentage of your total government expenditures. They can't afford much more than 4% right now, 4 or 5%. They can't. The budget implodes.
And so, what about Spain and all of this?
Same thing.
Are theirs around the same?
Yeah, they're in the exact same position. They've got an unemployment problem. They've got a growth problem. Same as Italy. Italy looks now like it could pitch into recession. If it pitches into recession, that immediately affects its closest neighbor, France. And the French are petrified of that happening. French banks have a lot of cross-border interests in Italy. There's a lot of cross-border trade, huge cross-border trade. That could impact the entire Eurozone.
Briefly before we go, the Bank of Canada said yesterday, they reiterated it today, that what's happening in Europe, there's likely going to be a quote-unquote brief recession in the Eurozone. Do you think if it happens, it'll be brief?
I think the Bank of Canada is trying to condition the markets here to expect that outcome. If it does happen, I think it'll be anything but brief. It's going to be very difficult to restore confidence in this environment where it seems that we're suffering from a significant leadership deficit.
We'll leave it there. Good to have you back with us, Alex. Thanks.
Thank you.
Thanks. Alex Jashevsky of Recovery Partners coming.